All right, here is the quick video to just show you the mentality behind the trades that we take here in Compound Wealth and how you actually enter them on ThinkorSwim or any platform, because I know that's some questions that I've gotten as well, and how we get in them, how we set stop losses, all those things. So I'll go quick, but I do want to cover everything that I just mentioned. So we go in and I'm going to actually do the Friday trade and review it in ThinkorSwim on their on-demand feature. So it'll actually allow us to practice this trade with real-time data that happened on Friday, April 19th. So if you go in, the alert on Friday, as you can see here, was that we were going to take the 50-75, 50-80 call credit spread, and we were going to place an order to sell that call credit spread at 30 cents. This was posted at 7:48 a.m. So I'm in Mountain Time, so that is 18 minutes after market opens here in Utah. And what you would do with that is immediately, I'm in my broker, I am setting up the trade. So going to ThinkorSwim, this is the on-demand feature that I talked about. So this is a virtual account. This part is. And I have us dialed into April 19th at 7:48. So this is right when the alert came out roughly. And we are looking for the 50, 75, 50, 80 call credit spread. So to walk you through before I press play here, because then price action will start again, to walk you through the mentality of this trade. If anyone remembers Thursday, we had a pretty big dip followed by what seemed like it was going to be an algo day literally all day. But we have pretty substantial resistance at this 50-50 to 50-60 level where, let me just zoom out a little bit further here. So that on Thursday, we took the 50-90, 50-95 call credit spread. But we had this 50-50 level was pretty big support here, as we can kind of see. I can lengthen this out for us a little bit, 50-50 roughly. We've just been bouncing here for I don't know, almost a full week as we came down. I guess it's 4 days now where that's been pretty big support, and support turned into resistance here on Wednesday of last week, where we came big pop and then dropped right back down below. And so Thursday we took this trade. Let me zoom in a little bit more here. We took this trade 50-90, 50-95 because we had that support. And then we had a small gap down that filled within the second candle of Friday the 19th. And so we still have this big level of resistance, big level of resistance here, 50-50, 50-60 area. And the alert for this day was the 50-75, 50-80. So I'm going to press play here. And I'm going to, actually, before I press play, because that'll make me work too fast. So I'm going to go over, this is how you would trade this call credit spread. So you would go to your options chain. And the first thing that you'd want to do is unless you're trading spreads often, you're probably looking at like a single order. Like this is where I just want to buy the 50-15 call. That's probably what you're seeing, unless you change this to a vertical spread. Or vertical, that's not the right one, vertical. So you change it there to vertical, and now you're going to see that you have the strikes, the short strike and the long strike. And we are doing a call credit spread. This is the call side. This is the put side. You can see that up there at the top, puts, calls. And you're going to go find the 50, 75, 50, 80, and we want to sell it. If you click right here, you're going to go ahead and try to buy it. It's really easy to flip that though. Just click sell and just make sure that you're on 0 days till expiration, just like the trigger called for, 50-75, 50-80, 0 DTE. And we're going to sell this. So we want to sell it at 30 cents. So I would lock this so that it doesn't just fill at a market order. It's going to fill at your limit order. Always have this on limit, never fill at market. If you filled this one at market right now at the time of recording, it would get filled right at 25 cents at the bid. So you'd be missing out on 5 cents of credit. So I'm going to go ahead and I'm going to actually send this order and then I'll hit play on the price action, but we will confirm and send this order to be filled at 30 cents. I'll send it. And then let me go back to active trader so we can watch. Now we see my order placed, but it hasn't been filled. I'll press play here. We'll watch price action develop here. Let me zoom in just a little bit to make this easier. And we just got filled at 30 cents on the 50.75, 50.80 call credit spread. So now for risk management, what is the goal of this trade? What are we going to do? So I'm going to come in here to my position. I actually go, this can be done in multiple places within ThinkorSwim, but if you come up here and it looks like, so here's our opening order, this 30 cents credit for 10. So I would come in here and I would right click and I would hit create opposite order because we've sold a credit spread. Now we need to buy the credit spread back. And we want to create two orders here. So instead of this being a single order, we need this to be an one cancels other or an order cancels another order. And so because you have an order cancels or an OCO order, you'll click duplicate here, right click and duplicate. And here's what you're going to want to do. We want to take profit at 15 cents. I'm going to pause price action just so that we don't miss it. Actually, I doubt we will. We'll play. So we want our limit order to be at 50% of profit. So we are going to try to take profits at 15 cents because we are filled at 30 cents, 50% profit. We want our stop loss to be at 90 cents, which is 300% of the initially collected credit. Obviously, we never want to hit stops, but stops are really important here so that we don't get into max loss territory, which if you've traded spreads and you've experienced a max loss, there are few things worse than watching your short strike and your long strike get breached. So the way that I will set this up is two orders. I have my first limit order at 15 cents. Hopefully I just hit my 50% profit and I'm out. I put my second stop limit order at 90 cents. And then I put the stop at mark price of 85 cents. So if the price of this spread, the mid price, hits 85 cents, I'm going to instantly have an order placed to buy this back at 90 cents. Helps me hedge a little bit against a massive move towards my short strike so that I don't miss out on getting filled and getting out of my position. So you have a 5 cent buffer there. And I'm going to confirm and send this and hit send. And we can go back and look at price action. And we can see that we have my orders working here. And if you hover over it, it's going to tell us we are trying to either buy these back at 10 cents, or sorry, at 15 cents, or we are going to get stopped out at 90 cents. And so this is the place where you can set it and forget it. You could let this run the rest of the day, and you're either going to get out with your 50% of max profit, or you're going to get stopped out. Luckily, we have lots of support up here at this 50-50 level to where we still have quite a bit of a buffer at the 50-50, 50-60 level before we even get close to our short strike here at 50.75. But as you watch price action go here, like I'll speed it up here just to 3x and we'll probably get filled pretty quickly. I know this was like a 20-minute trade or something like that. It was fast. Maybe it wasn't even 20 minutes. There we go. We're already out. It was like a 5-minute trade. So that's all you have to do. Now you're out for the day. We sold 10 of them at 30 cents and we bought them back at 15 cents. We are out for the day. Now we can go sit on our hands and not make any other stupid trades like I have multiple times in the afternoon. But that's really all that it is. So I know that some of you might be trading on other platforms like Webull or Robinhood. Robinhood, you can't trade SPX. Webull, you can. So the way that you're going to do it will vary slightly from how you do it in ThinkorSwim, but it's still all the same. It's still all the same. You're going to want to trade the credit spread at the strikes we give you. Obviously, it's not financial advice. Take whatever trades you want to trade, but these ones have a pretty high win rate. And as soon as you order or open the trades, go ahead and place your stop loss and your take profits. There's always the temptation to just hold for full credit. And that means that if you get in here and if you get in at 748 and out at 752, you now have 6 hours of stress while you could watch the market just rip to the upside and just tear apart your profits that you could have collected. Obviously, it could tank and you could easily hold for full credit, but it's usually not worth the anxiety. If you feel like it's going to be a down day and you want to hold on longer, you could set your stop loss to break even once it gets maybe to like 30 or 40% profit, and just set your stop loss to break even. And if it breaks even, cool. And if it goes to max credit, awesome. But I would just put as many things in place as you can to avoid your emotions getting the best of you during the trading day. Because if this starts breaking to the upside during the day, your emotions start to kick in. You start to have a little bit of fear that you're going to end up losing money, but you hold on for dear life and you hold on for dear life and you hold on for dear life. And before you know it, you could be in max loss territory. So these spreads are very profitable, but they are also very risky if you don't have the right risk management in place. So anyways, that's the quick video. Let me know if you have any questions on how to set these up. We post these every morning, pretty soon after market open. And there's like a 90+% win rate on these, hitting 50% of max profit. So again, any questions, let me know. Otherwise, we will talk to you on the next one. See ya.